felt kind of good to finally see this pullback start to form. I know, of course, if you're long, that's not a fun time, right? We're now officially seeing our first 5% correction in the S&P 500 for some serious time. I mean, it has been a minute since we've seen a pullback of this caliber, believe it or not. I think the last time we had a 5% plus correction was back in October of 2023. I think right around Halloween, we were experiencing a actually might have been a 10% pullback. Yeah, it's a 10% pullback. The question now for everyone is this a 5% sort of pullback in the S&P 500, or is this a 10% kind of pullback in the S&P 500? You know, my gold trade got a lot of attention recently, but my oil trade was up there in terms of how well that one performed. I think I ended up, I don't want to say a number off the top of my head, but it was less than $10,000, but greater than 7 on oil. And between gold and oil this year, we're doing okay. Again, like I said, it felt good, to be honest, to see this correction start to happen. And meanwhile, my trading account is doing just fine. S&P is obviously negative on the month, but my account is positive, which is a nice feeling. I'm not gonna lie. It's been recently where I've been underperforming just the S&P 500. It is a benchmark that I try and compare my results to. You know, at the end of the day, if you could just buy and hold the S&P, why would you trade? Well, the idea is if you're going to trade, your goal should probably be to outperform some metric that you're going for. Anyways, going back to when I started my trading account in May of 2020, I believe my return is around 165 to 170% gains. And the S&P 500, let's call it May, right around here to here, is up 89%. It was up even more. So I have beaten it, but it has been a lot of work. Anyways, let's push on. Where's the S&P going? Well, for those of you guys watching S&P, let's go here. So we've broken levels of support here, and this is actually showing something notable about the change in direction here. Okay. We've seen a failure of this upward trend. Sue me, I drew a trend line. I don't really use trend lines that much, but they could be helpful, especially on a daily chart when it's just clean price action. Everyone was looking at this. You know, another one that everybody's been looking at, here's one, the 50-day moving average. I hear it talked about all the time right now. The 50-day moving average has been breached. Let's look. 50-day moving average. I'm going to make it a little thicker for those of you guys. THICC for you guys, okay? Right?
You what?
So the S&P 500 has broken underneath its 50-day moving average. Okay, that's a little bit of a red flag, because a lot of the move here since our breakout in November has been, okay, the S&P's ripping higher, let's stay long. If that was your thesis, the 50-day moving average is intact, a lot of traders probably sold yesterday or the last few days, realizing, okay, 50-day might be gone. Do I use moving averages in my trading? Sometimes. It's not like crucial to my strategy, right? My strategy is not purely technical regardless, but it is still, there's some technical components. So here you go. You got the NASDAQ 100 also breaking a key level of support. I mean, the structure here is clearly broken. The dominant uptrend for now seems to be under threat. In my opinion, even if you get a NASDAQ pullback here, I'm not selling these things. I don't like to short indices. I find it to be very difficult to do because when they rip, they just rip for a long time. So I'm not betting that this is absolutely going to crash or anything like that. But I think that the NASDAQ and the S&P have room to move lower. We are getting close. I know, guys, not everybody trades indices. So let me push past here. Gold looks strong. Gold continues to look strong. And if you've been betting against gold, it's yet again, it's okay. It's been tricky. That's been a hard play to make. If you've been betting against gold, again,
it just does not compute in my brain.
Okay. The bulls are ringing the register. And for the gold market here, though we have not necessarily continued our pace to the upside here, don't take consolidation as a sell signal, okay? Be really careful. Also, guys, we're getting close here to the news here this morning. We've got unemployment claims coming out. I'll give you my reaction here in 30 seconds. Let's just switch over to our all markets view so that we can see all the markets together, and we'll react here to see what we get. Indices traders, Nas, S&P, Dow, dollars right here, pound, euro, gold, and oil is right here. We're coming in about 10 seconds here. Let's do our breaking news.
It's our Edge Finder anniversary sale. If you want 40% off the Edge Finder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our Smart Money Indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edge Finder anniversary by grabbing yourself a copy today on our website, a1trading.com.
Very nice. Okay, let's see what we got for claims here this week. Claims data should be out any second. Let's see if it does anything to the markets today. Okay, so nothing significant. Dollar is slightly up, so that would suggest perhaps some strength in the labor market. Let's see what we get. Well, it was the Fed Philly Manufacturing Index also came out. That came out pretty green. But overall here, what we can see is nothing too surprising in the claims department. Philly Fed Manufacturing Index came out better than expected. So perhaps a little pop in the dollar. And right now, it does seem like the stock market is a little sketched out by anything that's too positive, which sounds weird, but strong economic data might push back further the expectations for when rate cuts are coming. And they've been pushed back over and over. We are now expecting rate cuts in September. That's the new first rate cut expectation is in September. So, put that in your back pocket. But man, we've been watching the stock market freak out over and over here because the rate cut story, what was, we're going to see rate cuts in March, is long behind us. And so now that we see like pretty much higher for longer is now being accepted by the market, that's what's probably causing this pullback. That in combination with, what's going on in the Middle East. But I think really the big story for financial markets is a lot of people are expecting a lot of rate cuts. And now that might be on hold for a while, certain areas of the markets are really not liking that. Especially look at the Russell. If you've been watching the Russell, guys, oh my goodness, the Russell's been awful. Here's the Russell. Guys, the Russell, I did a study on the weekly chart. Not a study. I just looked back on the weekly chart. We are at the same level that we were in 2020. Yeah, we're at the same level on the Russell as we were in 2020, end of the year. That's rough. Think about this. You're buying into a higher risk area of the financial market, smaller cap stocks. And during this whole time, you have made $0. Unless you were selling puts, selling covered calls. I made a little bit of money trading the Russell in 2023 by selling puts and selling covered calls. And that ended up being a great strategy for 2023 because the market went sideways. And if you're an option seller, you know that we love sideways markets. I am silver. I'm still in silver, guys. Here's my current position. I'll show you my P&L on SLV is up $429. So nothing crazy. It hasn't really moved that far, but continue to watch this one. Again, here's my thoughts on the metals, gold and silver. Don't take sideways price action to mean bearish. Just because we've had a good run and we've gone sideways, again, does not mean that this market isn't just priming before exploding higher. It totally could. Now, that being said, I could be wrong about this. That's why I put a stop loss on the trade, right? So I'm accepting that I could lose, $800,000, $900,000. I've got to go look at what the calculation came out to. But I'm risking that money because I think that metals have room to continue their expansion. As crazy as that might sound, you might say, no, Nick, what are you, crazy? Gold's already up. You don't buy gold when it's up. But maybe you do. Maybe you do buy gold when it's going up, right? There was a lot of times where people said, oh, gold's already gone up. Can you even imagine? Some of you guys, some of you might remember this time. Do we have any, I'm not going to call you old, but I'm going to call you any experienced ladies and gentlemen in the audience who may have been trading or remember the gold craziness of 2000 to 2011? Now, I was not trading and investing at this time, but my dad took me to some coin shows around this time when all the craziness was going on with the metals world. I still have in my little like collection box some old coins that I bought from that coin show so long ago. And the craziness about it is silver has performed so badly over time that I don't think they've even gained any value. Maybe, well, I don't know. I think it was like 2013 that we went to some coin shows. So maybe I'm up slightly on my little, you know, couple ounces of silver that I bought back in the day. So anyways, yeah, so I'm still long silver. I'm long, I'm not long oil anymore. I did get stopped out of oil, guys. For those of you who were keeping up with oil with me, here's what happened. So I was long oil here. The market went in my favor, but I was waiting for a break through the highs in order to trail stops. So I did not trail stops. That's a rule that I have. I like to wait for a breakout through structure in order to start trailing stops. We didn't get that. Price came back. And not only that, it dropped, and I stopped out of my trade just below this wick low. So this was, if you guys remember, my stop loss was just below the wick here. So I stopped out, and I'm feeling really thankful for the insurance component that is a stop loss. When you pay for a stop loss, or when you take a stop loss and you put it on your trade, oftentimes people get really frustrated because sometimes you have a trade, let's say this is your stop loss, right? This second bar is your stop loss. People get really frustrated because sometimes this happens, right? Where you get stopped out and it goes off without you. But you have to also accept that, you know, the insurance that you are paying for is like, you can also have this scenario, but you can also be saved from this scenario. If I wasn't using a stop loss, my gold, I'm mixing up all my commodities. My oil trade would have been much greater than it was. I lost about $950 on this trade. So I lost $950, okay? But if I didn't have a stop loss, this could have been like minus 3,000 or 4,000 at the peak drawdown, right? So what kind of risk to reward is that? If I'm looking for a move back to the previous highs, right, with this style of trading that I do, which is momentum trading here, I'm looking for, you know, is oil still, look at this, oil's not even, and I actually love to see this. So oil has dropped from what was a bullish reading. Officially, the bullishness on the edge finder is over for oil. It's lost some of its trend here. And so again, that's going from a +2 to a -1 and taking us off of our bullish bias on the edge finder. So I'm good with that. I actually very much agree with let's pause on oil, and the edge finder is calling that out already. So I'm still in silver. Silver's still giving me the green light, or the blue light, I guess, if you're an edge finder user. And feel free to pause the stream, pause the video if you want to see other assets. I'll flip it around. Here's your bearish readings. Lots of bearishness. The Russell's getting a sell signal. That's super interesting. Euro dollar bonds, which is going terribly for me. I am long bonds, and I'm getting a bearish reading on the edge finder. Nick, how dare you break the rules? I know, I'm feeling dumb for it too. The Russell is getting a sell signal. I find that really interesting. While I don't usually short indices, I will keep an eye on this. The Russell is looking tired here for sure. And it makes sense. You know, if we're going to enter into this higher inflation for longer story, certain areas of the market are just going to hate it, like the Russell. The Russell's going to hate if we stay in a higher interest rate for longer environment. Why? Because growth could slow at some point. You could have a recession at some point. But more importantly, all these companies that are very reliant on affordable debt, if interest rates are higher, it's more costly to them and it hurts their bottom lines. So these companies perform really poorly. What happens with dollar CAD? It has a bullish bias on the edge finder. Yeah, let's take a look at USD CAD. USD CAD right here. Yeah, I like this chart. I like pretty much all the dollar crosses right now. I've made this point a couple times. Edge finder users will know dollar charts, almost all of them are getting strong readings. Well, actually, all of them are giving you essentially bullish readings for the dollar. So when I look at this chart and I say, okay, everything is pretty much leaning bullish for the dollar right now, then what I do with that is I look for pullback opportunities. So let's start fresh here on USD CAD. So here's your daily chart. It's probably not at a point where I can jump into anything right away. But if you jump down to the 4-hour chart, is there anything here? You know, if you're really aggressive with dollar CAD, if you really like the pair, perhaps you're looking here. I'm pretty selective with my currency trades. Most of my trading is not currency trading. So if I do take it, usually what I like to trade is like dollar yen and euro dollar for the positive swap potentials as well. So let's go look at dollar yen really quick. Dollar yen looks just really strong. I think dollar yen, you know, as crazy as it might sound, I think it continues for a while. The Bank of Japan is under question here as to whether or not they can continue their campaign of keeping the exchange low relative to the dollar, right? Number of yens per dollar. They really don't like the costliness of dollars to their own currency right now. And so, you know, that makes sense. If you're like Toyota, right? If you're Toyota, then if it's really expensive for US consumers to purchase your cars, which is a huge market for them, that's tricky. That being said, I think though that Toyota does a lot of its manufacturing in the US, but not my area of expertise. So they might do a lot of their business in US dollars already, but they send it back home to Japan. So maybe that's actually good for Toyota, right? Higher value of dollar, they send it back to Japan, get a lot more out of it. I don't know. So other currency crosses, dollar Swiss looks strong, dollar CAD, Aussie dollar. Aussie dollar is looking kind of interesting. You have what was a level of support here coming in as potential resistance. This also gets confirmation from the edge finder. Pound dollar. Pound USD, not quite at our pullback level that we drew up, but I kind of like this one as well. Quick look at the COT data. If you haven't looked at it already, here is the latest COT data. Kind of interesting to see where we're at with this, because what we can see is gold and oil, silver. These things are still heavily bought by institutional money, so they're long overall. Yen, Aussie, Swiss, CAD mostly bearish.
So we just had the news from jobless claims, so it looks like we have seen a bit of strength there from the dollar. So I'm hoping to see if that continue. If not, I do have some contingency plans with Euro USD. I'm looking to see if I can shorten the retest of this low here, which we're not too far away. If dollar decides it wants to be a little bit more weak for a day or two, then hopefully I can get a retest of that level, or this one up here. And same with New Zealand dollar as well. Hopefully get short on this level here. So I'm very focused for some dollar strength. I'm currently still sitting in my pound NZD long, which I took last week as well, which has moved okay, but we're seeing some retracement. So hopefully that can find its feet again and push up. I'm looking to see if I can get additional trade to that one as well. But yeah, I'll be nursing that trade too. But yeah, I'm very focused on dollar. I really like the price action, really confident move to the upside. So looking for a pullback and then more upside. So yeah, looking for the inverse on the dollar pairs, Euro USD to the downside, New Zealand dollar to the downside, pound to the downside as well. So that's kind of where my attention is at.
Yeah, I think the dollar crosses right now are moving pretty well. I made this point earlier, but with the software that I use, the Edge Finder, we don't usually get this, but right now you've got just uniform bullishness for the dollar across all of the readings that we use, which is, taking into account a lot of different economic data, which, the dollar is so strong right now, arguably because there's a little bit of concern in the world, so the safe haven effect is there, but also because relative to its peers, a lot of economic data keeps coming out really strong for the dollar. Meanwhile, Europe and the UK are seeing some slowdown. So, we can see that prevalent in the scoring of all of this economic data. That being said, when you get those clear, dominant, kind of biases, it creates some really clean technical, market action most of the time, right? So we're seeing these huge breakouts on the dollar. I think a lot of people are probably looking for pullbacks on the dollar. We'll keep an eye on that one. That's what I'm looking for too. If it doesn't happen though, and it doesn't have to, the economic data is so strong, it could just continue to trend higher. And so, there might be, when you break it out to individual currency pairs like you've done, Miko and Marco, that dollar individual crosses. That's why, the dollar index is useful, but it doesn't always give you, you can't, most people don't trade the dollar index. They trade some cross, or they trade some variation of it. So should be interesting. That being said though, at the same time, gold continues to go higher. I've got a fundamental explanation for that, but before I get to that, Marco, what are your thoughts on gold right now? Any ideas? I mean, gold continues to just keep going up and up and up, and this sideways price action has got to be driving the bears crazy right now.
So, yeah, for me, according to how I view the momentum, this is not looking great on this 1 hour chart, because I'm seeing some major selling pressure right here. But let's bump it up to the 4 hour. Yeah, it's definitely look like it's moving in sort of a S&P 500 way, which is kind of like in a channel. So I am seeing some strength, definite strength in momentum here in all of these legs, but then a major rejection with the huge wick and the red candles. Let's go on the daily. And on the daily, well, on the daily, I'm not seeing any sort of major weakness. I'm just seeing some nice, large blue legs. Yes, you're getting a huge wick on the top, but you're not getting that major red candle, such as this one, for example. So I would expect more upside for gold. I'm not seeing it slow down at all on the daily chart. I'm just seeing that huge wick rejection, but then again, it happens. We can just continue going up like this.
Yeah, it's the thing about the momentum of gold is there's no question that it's slowed down. I mean, you showed that date. Well, you got that daily chart pulled up right now. That daily chart is just kind of slowing down. You can see it curving towards the top there. And I will say that doesn't necessarily mean that it has to come down. But for the bulls who were just kind of running hot with it for a little bit, that seems to have slowed down a little bit.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.